Eric Mother.com for the weekend of December 12th and December 13th, 2015. Let's take a look at the markets on Friday. We see that the US market was down, let's call it about 2% across the board. We see that crude oil was down also about 3.8%, and the VIX jumped up about 26%. For the week, S&P 500 was down 3.7%. For the week, the NASDAQ was down 4%. And for the week, the Dow was down 3.2%. Before we go to the charts, one observation here is one of the reasons why I think the market, or the best explanation why the market was down substantially this week, is because we are moving below 50 on the Dow. We also moved below 50 on the weekly RSI on the NASDAQ, and so did the S&P 500, moved below 50 for the week on the weekly RSI. And if you go back and test this, every time the market moves above or below 50, more often than not there tends to be a big movement in the price. So this is explained technically from my opinion because the RSI jumped below 50. Anybody who was watching that throughout the week was aware that net this would have easily developed into a down week, and a big down week, which is exactly what we got. If you take a look at the weekly chart for the NASDAQ, you see that the line we were watching for resistance has come into play perfectly over the last month or so. The market has hit this line here, which has been resistance going back to about, this line goes back to beginning of 2014. So that was one layer of resistance. The other one was somewhere around here, where the market has been finding it difficult to move above this RSI level. Once that resistance was concerned, or was confirmed, more than likely the market was going to have to test lower prices. That's exactly what's going on. Now, the one thing that we can see here based on where the market closed with its weekly RSI, for the NASDAQ, the market closed just under 49, which suggests that let's be aware or sensitive to the fact that if the market has a move back above 50 on its weekly RSI, more than likely that's going to also suggest a strong up week. So because of this close on the weekly RSI, any snapback or any type of rally throughout the week that moves the market above 50 might suggest that we might get the exact opposite. And you can see an example of this if you go back to this period here, these 2 weeks. Sharp down week followed by a sharp recovery in the following week took place around the 50. So just be aware this could also take place here depending on which way the market wants to go. Now on the NASDAQ weekly, we can also use the recent weekly closing low that was in November. The price to watch there is 4927.88. If the market drops below that level, so this November closing low, if the market was to drop below that, that's going to be a sign that we are in for another down week. So just be aware if we crack below that, that's not good. As an example, you can see the last time the market had a similar type formation is once it recorded this low here in July, and the market would go on to break below that. That was in August. That led to a major drop. So just be aware that there's another level we can watch short term, which is the weekly closing low for November. Anything below that would suggest that maybe you should not be looking for some long ideas, and probably the path of least resistance could be to the downside. So watch that 4927.88 on the NASDAQ. Anything below that would suggest that the downside pressure continues. If we take a look at the NASDAQ, you can see that we broke through this support that we were holding. Nice support here throughout the week. Seemed like the market might hold this line and bounce, but we broke through that over the last 2-3 days. Once we broke that support level, you can see that the market has been down over the last 3 days, ending up with this nice move to the downside on Friday. Now, that is correct that the market did break down short term, but there's a line that we now have to be sensitive to, which is this line somewhere around here on the daily RSI. And I guess this line can also be, one can say it's just about 30 at 38.2. The reason why this is a line we should watch for potential support is every time the market has come to this line with uniform activity holding above this line, the market has had a swing trade to the upside. So just be aware that that is exactly where the market closed. You can even see here double bottom support during this period here, And even here, once the market recaptured, this was uniform action below the green line and back above it. So there was a re-entry somewhere around there. Uniform action below the green line, back above it for a re-entry somewhere there for a successful move higher. We came close to the green line here and touched it for these lows, and now the market is resting on that line. So depending on whether we can bounce back above that green line with uniform action or not might determine the next swing trade. Take a look at the Dow, and just to go straight to the main points, there was a resistance line on the weekly. If you take the weekly closing highs over the last couple of weeks, right there, and so once the market found it difficult to move above that line, this is why we are pulling back. We were watching that as we came into the new week. Also take a look at this line here that we've been drawing for the last month and a half. So once we hit that level there, you can see that the market has found it difficult to move above that red line. And of course, we had a strong down week as the Dow also moved below its 50 RSI level. So depending on what happens next week, any movement back above 50, the market could move higher. And let me not forget to mention that now we are trading back below the 10-week moving average, which is generally not a good sign. Last time we were trading below the 10-week moving average was during this period here. So trading below the 10-week moving average tends to indicate where the momentum is for markets short term. So again, just like we saw for the NASDAQ, remember this action here, you had one strong down week as the market closed below 50, and the next week there was a recovery back above 50 on the weekly RSI for another strong move. So I hope you can see that on this chart. In fact, let's take a look at a 1-year weekly for the Dow. And so I'm talking about this down week here as the market closed below RSI 50, and then a strong move the next week as the market moved back above RSI 50. You can also see another example right here. Strong down week during this week here as the market did move below 50 early part of 2015, and then there was a strong snapback rally as the market recaptured back above 50 the subsequent week. So just be aware where we closed this past week is tricky, because any movement back above 50 opens the possibility of market continuing to change this up and down reaction. The next reaction might be to the upside if the RSI is back above 50. Hope that makes sense. Now the level to watch on the Dow is this recent weekly closing low. Anything below that in the new week might suggest that the market is still in trouble. So just watch that recent weekly closing low for the month of November. The level to watch there is 17,245.24. Anything below that and the market is in trouble. Take a look at the Dow Transports. Now, if you've been watching my weekend videos, or if you're a subscriber, you are aware we've been talking about this resistance line on the Dow 50 level. So since about May of this year, the market has been unable to move above the 50 level on the weekly RSI time frame, and this generally suggests that now we're in a different environment, and that since 2009 the market has been moving higher, right? But it seems like in 2015 this is a change. This type of resistance at the 50 RSI level on the weekly is a change in market sentiment, suggesting that what we are seeing is consistent with the resistance at the 50 level, and might even suggest that there's probably more downside in the markets. So we see this week that the Dow Transports are closing at fresh weekly closing lows for 2015, in fact going back to more than a year and a half. So we can see that also on the monthly, the Dow Transports are breaking down to fresh monthly lows, and they are breaking below 7785.63, which was this monthly closing low. And also, more importantly, looks like right now the RSIs and the MACDs are making a move to fresh 3-year lows, which is a major sell signal. So just because we're moving to fresh lows on the MACDs and the RSIs here might suggest that there's probably the chance of a major correction still to come. So as long as the Dow Transports are below 7,785, one has to be careful, because this is a major sell signal by itself. Let's take a look at the S&P 500 without repeating ourselves. Obvious lines of resistance, just like the other major markets. We've seen resistance on the RSI also. So that was obvious. Also, we see that the S&P 500 showing the same resistance right there on this RSI level where it has been unable to move above that level. There's also another line of resistance that we had talked about a couple of weeks ago, which is this line here. So draw it like that. So since the break, this break in August that brought the market to this drop here, the market has been unable to hold above this line here. So kind of been finding it difficult to move above this line, and now we are below that line. All right, so that's still showing strength to the downside. Keep in mind that if you take a look at the weekly MACD, if the S&P 500 ends up moving above the zero line on the MACD and back below the zero line with uniform action, any type of uniform action back below zero would suggest that this is another sell signal. So let's watch the MACD here, or the main MACD. Anything showing that it is gone above zero or back below zero with uniform action tends to be a major sell signal also. The one thing we can see here for the S&P 500, unlike the Dow and the NASDAQ, S&P 500 has already dropped below the weekly closing low for November. And the level to watch there, which suggests that this market is still under downside pressure. S&P 500 did move below 2023.023.04. So the fact that it's broken down to fresh weekly closing lows over the last couple of weeks might suggest that net there's still more downside pressure that is left in the market. Now if you take a look at the daily, the one thing I want to talk about here is change our view a little bit and talk about the potential for support. This line here on the daily RSI, this line again happens to be at about 38.2 on the daily. Somewhere around here, if the market can hold and bounce, the last bounce was here, uniform action below the green line, back above it for these lows here. So what I'm saying is also we had a nice support on the green line, which is these lows. If the market can sustain and move back above the green line with uniform action, any type of uniform action back above the green line, might suggest that maybe this is where the market stops going down. So just be aware, we should never be too arrogant with our analysis, because there's lots of hidden setups that markets can display from time to time. So I would say be aware. If the market can hold around here, the market might actually be ready to bounce. So we'll have to watch that, see what happens. Even though short term we can see, yes, S&P 500 did break support right here. So this support could be important or maybe not. We shall see. The key is what happens now that the S&P 500 is coming back to test this line of support that has been very reliable over the last 2-3 years. So if it can hold, that's good for the bulls. If it breaks, then that's good for market bears. One thing we can see here on the S&P 500 hourly is the potential for support. As you can see, we've been making lower lows over the last couple of days, but the RSI really hasn't dropped. So this could be good positive divergence depending on how you want to draw it. It connects the recent lows on the RSI, and here I'm using RSI period of 26 just in case it looks a little bit different from your chart. So again, the fact that we've been making lower lows in price here, you can see lower lows, and there's a line of support on the hourly, might suggest that maybe this is good enough to stem any further drop in the market. Also, we can see this on the 30-minute chart for the SPX, giving bulls some type of I guess confidence that the market might stop going down or something to watch. This line here is holding on the 30-minute chart, and as long as it's holding, the market might have a chance of moving higher. Obviously, if we break through that line, then that might suggest that there's more downside action. So I think given the 30-minute chart and also the hourly chart, this is something anybody looking for reasons why the market could bounce can come and find this is good enough evidence that the market might move higher. If it can bounce on the RSI, hold, then this might just generate enough energy. Given the daily charts and given where the RSI closed on the weekly, don't be surprised if the market decides to do the exact opposite of what happened this past week. And because the VIX is elevated, we can take a look at the 5-minute chart, and we can see also the 5-minute chart does give some type of suggestion that because we've made a lower low in price here over the last couple of days, we can see that the 5-minute chart is showing an improvement on the RSI. So the RSI is improving. Might suggest that on a short-term basis there might be I guess some energy pointing to the fact that markets are now poised to more than likely start the week with a nice uptick because of this lower lows in price and improving technicals on the 5-minute chart for the S&P 500. All right, let's wrap this up. Take a look at the monthly charts. You can see here that all markets are now showing that they have failed to break out on the monthly. That's true for the NASDAQ. You can see here that the S&P 500 also did not manage to hold above the previous all-time monthly closing high, so that breakout failed this past 2 months or so. So the market was unable to do that. Keep in mind that failed breakouts are notorious for taking markets lower. The Dow never even got close to its breakout level. So, from a big picture standpoint, things are setting up to where one can conclude that, more than likely it would not surprise anybody if the market trends lower. Now I want to show you a long-term picture for the S&P 500. And we're going to take a look at 2 major drops here in 2000, 2001, 2002, and this big drop in 2008, early 2009. And what you're going to see is that there's a simple line on the RSI on the monthly. So this is going back to 1990 on the monthly. It's going to draw a simple chart, a simple line here, somewhere around there. Now where does this line come from? I'll show you. The line comes from this break here in 2000. So once we broke through that, now keep in mind this red line happens to be coincidentally at about 61.8. All right, so get that out of the window. So we broke through that. That was a major sell signal. In fact, that line was a break going back to this trend line here. So there was a break of that trend line in 2000, and you know what happened in 2000, famously now called the dot-com bubble bust. There was another break of that red line here in 2007, tail end of 2007 for that break point there. We know what happened in 2008, 2009, and now we are seeing the market showing resistance on this red line. So from a long-term monthly chart, this might be indication that we should not be too surprised if we find ourselves trading here or here or here or here in 2016 and beyond. There's another view. If you take a look at the monthly MACDs, you can see that throughout the period where the market struggles, so let's call it 2000, 2003, happens to be when the RSI, when the MACD, is trading below zero. And also the period here where the market was down in 2007, 2008, 2009, happens to be when the MACD is trading below zero. And now if we drop below zero here in the current market, be aware that might also lead to a phase where the market more than likely is gonna be going lower. So be aware. That's the big picture. We'll see how things go. Keep in mind, you got options expiration coming in the new week, so lots of volatility. Eric Muadh, Muadh.com. Good luck, peace, and blessings. ESCS. Yes. Ooh. I am out.